What's good, guys? It's Nick. Just touching base after the weekend before we start a new trading week. I just want to hop on, kind of give you guys another 30,000 foot overview of kind of how I find supports and resistances and what I look for, what I was trained to basically learn in an effective way from a foundational perspective. As always, I'm not a licensed financial advisor. I do hold my Series 7 and 63 in my SIE. So this is all an opinionated, educated viewpoint based on some history on the desk. No longer sponsored by a firm, so everything I say is completely legal and completely opinionated. Like I said, just based on experience. So I just kind of like to give you a start from where we're sitting, but also just this could be a good TA video as well in regards to finding different support lines, what I look for, and how I draw them. So I usually always back up to a week-long candlesticks. With AMC, I went back 15 years. Obviously, inception was in 2013, so just went back as far as I could in order to find like trend lines, kind of what I'm looking for. And sometimes I also do like to include your volume profile just to kind of give you more macro perspective on where strong points of consolidation, accumulation, and things of that nature. So let me get into this here on the weekly. It'll look better on the daily to give you more indication of high volume zones. So I'll actually take this off for now. But as we get into it, usually what I start with is on my weekly candles. I don't do a ton of uptrends on weeklies just because the bodies can be thrown off a little bit, but it is good to know where they're at. But mainly what I do on my weekly candles to start when I'm looking at a stock is I use horizontal lines, so just kind of find support and resistance that has the most touch points based on bodies and other candles. So this is probably a solid one here as it cuts across the vast majority, and it's actually the top point of our January squeeze and many other important factors that have come along the way. But a good thing to kind of do is just to keep it organized, because you can get a lot of kind of random drawings on your charts. Is I always use just like a Roy G. Biv approach, to where the bottom line is red, one above that is orange, yellow, green, so on. Just to keep things organized, and it's more visually not only appealing, but just makes sense. So this is probably my red line, and then I'll draw some like more macros with a little bit closer history. This is a pretty important one here. And I just do this based on the amount of touch points I can get going across. Usually the more touch points the better. Sometimes the bar just kind of sits on there naturally, and it makes sense as to why that's there, especially when you get into the micro. So I may even adjust this guy down just a tad here, and this is probably a good spot for it. So that one I'll just kind of keep it out to here. We can even extend this just a little bit over just to give you a perspective. So that's a lower zone, and then you can probably go a couple lower here. This is 1330. And again, I'm going off the far side as well. So I'll probably put one here. Oops. And you can use fib extensions. Like, yeah, it's the same idea. I was just taught to kind of put them in yourself, because at that point, then you can kind of visualize them better. Because with fib extensions or fib retracements, sometimes it depends on the points you're using and what else is considered within that. So it's just good to kind of have a little bit of both mixed within, to where you can see it visually making sense, while also watching the macro trends, because it will follow a lot of these pretty close here. So this is probably another one right in this range, and I want to keep the video about as short as I can. I know I'm not very notorious for that, but these are some of the lines I would be looking at from a macro perspective. If this was just any other stock, I just wanted to redo it for AMC, and then you could probably argue another one tied in here. probably around 12, 12.20. Yeah. Put another one in here. So again, this is what I do with a lot of my securities when I'm looking for trend lines. I trust my own TA from a macro perspective more than I do Fibonacci's, which a lot of people have their own opinion on that. But it's just what I've found has worked the best. So if you find something that works good for you, I always recommend to stick to it until it fails, and then you can kind of go back to the drawing board, compare it to fibs, and figure out what you did there. So if we get into here, yeah, and we may adjust these as you get down to the daily candles. This is just kind of a good approach on what I look for. Yellow, green, blue, and go that, maybe go darker. And then there's obviously some more up above here. So 22.5 was a big one. Yeah, this range here. And this one you'll understand more on the left side. I'm just drawing these a little bit quick. But a lot of times if you extend to the left, you can kind of see where this hits off of and the trading range that it's in. So we got red, orange, red, orange, yellow, green, blue, indigo. Again, whatever your understanding of indigo is, it can be different for different people. This is just what I kind of use. And then there's a violet, and that's when you kind of get into these zones. But I just wanted to give you an idea of kind of the core foundational resistances, because these are the main ones we're going to be looking at in the meantime. And then beyond that, we'll kind of show you what we're looking at. So this is my weekly macro perspective. And then from a week, I kind of go down into a 5-year, 1 day. This just allows me to kind of confirm some of these channels and show that they have been respected on the daily as well. And you can kind of see how that's the case. But then with the weekly, it's a macro horizontals. But then when I get into the daily, all I have down here is just your OBV, volume, and then this is just a simple MACD along with your RSI underneath, just to show trends. So again, this is like my macro viewpoint, but when I get into the daily here, this is where I can start drawing my uptrends. So I got my macros kind of confirmed historically and how they'll be used, and then this is where I get more detailed and start pulling some more uptrends. In this case, AMC, it's pretty vital to know some of these. So I just like to show you what I look for. A lot of times I just extend the line out, and I'll show you when we get in here. Like this one, you can kind of see the reasoning for it. And they go off of bodies, like I mentioned. Like when they slip this one out, that's kind of why you got the big fall off there. Excuse me here. Well, you got that big fall off there because it broke a macro trend. So these are just something that I kind of put in a little bit rough to start, meaning I get the skeleton built and then I kind of expand off of it from there. And then this one can probably be pulled up to this line and then down a little bit. And I think there's one more below here. Yeah. So I try to keep them somewhat parallel. You can use pitchfork for this too. But same kind of concept when I'm building this out is I'm just going off of the bodies of candles and what makes the most sense from a trend perspective. And it'll kind of just lay itself out for you as we get into this a little bit more. I just gotta adjust some of these things. And then again, as you get deeper into your micro here, or macro, and then into the micro, that's when you can start like fine tuning some of these lines and back testing them, meaning like has it respected this support line in the past and what do I need to look for. So we'll get into that here shortly. And you can argue, you can make as many of these as you want. I don't like cluttering my charts too much, just because There's a lot of other indicators you get on as you get into more of a micro, to where I don't want a ton of lines just flowing through my chart. But you'll see as I start laying these out how they make perfect sense in regards to where they slip us out or where we catch support and what to kind of look for. I could probably push this guy up to here based on the macro historically. And then it's funny because it should line up right over here. And then you can kind of start pulling these up more to where it makes more sense for you. This guy I might have to adjust as we get up. That's probably a good spot. And then, like I said, it's just trial and error, and I'll kind of lay on the chart for you and make sense on what we're looking for. And then you could argue one big macro from back here that I have seen. Let me just adjust this a little bit. Because this one does get respected in multiple areas historically, and kind of what they pin it under. So this is kind of what we got caught on, luckily, before, not too long ago. But I do like to point it out because this is something that's going to play a key figure for us going forward, and it's something that we need to be aware of because it is a kind of a final stop or a floor that they could potentially take it to, along with maybe some below. I'm not forecasting anything. You'll find out later in this video that we won't even be worrying about that, but I do like to just at least give myself a foundation to build off of. So again, it's up to you on this color. As for like a final floor, you could do like a deep red and then just make it, I don't know, a thicker line there to where you know that that's what we should be catching off of. Or I guess I'll make it green because it's a historical uptrend. And then these ones, same thing as before, just Roy G. Biv, whatever makes sense. It's just, this is how I usually always indicate mine. Orange, yellow, and green. This one will be a little bit confusing. I like to keep this, do a dash there for the uptrend. It's always good to expand them too, because you'll see how much it puts into perspective as we get going. But that's basically it, to be honest, in regards to how quick you can just draw a simple macro. Again, you can use pitchforks to make sure these lines are perfectly spaced out, but like I said, as we get into the micro a little bit more, I'll start adjusting these lines. But now that I got excuse me, kind of my skeleton built, it allows me to get into here and just look at certain trend lines and how they work. So give me a second, I'm trying to get these option expirations off of here. Here we go. But yeah, that shows your clear uptrend dating all the way back to pre-2020, and what we've kind of caught off of before. So now that I have the skeleton built, you can kind of get more into the 180-day 4-hour. Sometimes I like to even keep this as a 360-day, or I'll just kind of get narrower and go 1 year, 1 day, just so I can get the last squeeze in there and zoom in a little bit further. We'll also minimize these to give us some more room. Put the on balance. We can put perfect. And sweet. So that gives us more room. Gives us the OBV up here, and then kind of a rising support, lateral or horizontal resistance, and we can kind of break it down from here to make sure our trend lines are accurate and they're being respected, or if we need to adjust them at all. So I'm just going to kind of zoom in a little bit further to make sure things line up. So macro, Your purple, it's a little bit higher than our previous breakout in January, but obviously once we broke this zone, that's where it's kind of open reigns. You could argue, excuse me, these allergies are kicking me. You could argue that number's even down here around 19. It seems like once we kind of break into this 20 level, it gets extremely volatile. But from a foundational TA standpoint, I'm gonna leave it at here. Probably gonna leave it right about here in regards to like breakout zone. So 20-ish range, 20.75, and we'll adjust this as we get more into the micro. And let's see, this is our 1640. And can adjust this a little bit. Again, I'm going off of bodies. Wicks are fine to go off of. It's just like bodies tell you that's where the most volume was. So I'd rather use that as more of a definite support or resistance versus looking at a wick and treating that as if it was a catalyst that day or something outside in the market that caused it. So bodies just give me more data points to go off of. So those tops are good. This one's around 14. We might be able to adjust this a little bit. Could argue it's even up here. Yeah, this one might make more sense up here. And it's been tapped off of over here as well. Pardon me, guys. That looks good. We got the orange. We can maybe fine tune this guy just barely. That'll be more your 1220-ish line, 1215. Pretty trusted support or even a breakout zone. We try to get back above it down here. And then you got your bottom one, this red one. Again, I could maybe go one layer deeper on this, but I don't think we'll need to worry about it. But we have historically tested this 970, 979 mark. So I like this retest here. So those look good, and then let me get into the uptrend. So the rising support here, and kind of how I look at these, because these ones are a little bit unique based on what makes sense. Sorry about all the coughing. What makes sense in regards to what it did in the past, what it respected or stayed on top of, or vice versa. So these ones I could maybe send this guy up here, and again, I don't go off of wicks too often, but if there's just too many to discredit, I'm going to use it, and I think this is a strong line here. It's where it shows these two kind of touching down. You got our breakout points or inflection points down here. Even up here and down here, it resisted off and then stayed under. So I'm going to keep that green line where it's at. Yellow, this one might be able to get moved up just a little bit. Let me see what makes sense on the left side. I think you can leave this one here, just because these dates here are important. And if you look over here, once they kind of slipped that support and slipped under this one, they were able just to take it under. So I like to find where they seem to catch or kind of slip it hardest. So let me see here. That's probably a decent breakdown. That might not be a terrible one either. What does it look like on the left side? Yeah, and sorry for taking so long. I just kind of like to show you my touch points and what I use. So the yellow here, it caught support, and that's kind of what it had to break through, and then it struggled. You'd even pull it up just slightly there. And that makes more sense there. Kind of came down and touched that. And it's catching here too, and what it slipped it under here. Alright, then we'll go orange. This one, good rising on that side. Good catch here. Maybe even zoom out and give us that. So that got the peak there, came down underneath, a little consolidation. Then we got your kind of final support down here. At least from like an uptrend perspective, like if people say like we're still in the uptrend, in my opinion, this is what it means, at least to me, is that this is our final line of the uptrend, really, in my opinion. So we can still hold it if it drops under. It's like that's just once you break out of an uptrend, you kind of go to the horizontal lines. Not back to the chalkboard, but it is kind of you just gotta see where the momentum's shifting, like if it's broad market pushing it or not. But this has been honestly really respected down here. I'm trying to find something in between, because it was pretty close to bankrupt down here, and this is where I entered. Yeah, we got open $2. So these are the uptrends that I like to go off of. Here's your macro one that we had before that it caught off of. Your rising supports that it's catching up onto the upside, and then your horizontal and what we're looking into. So once you get that down, you can kind of get more into your micro movements and really pinpoint more of the data in regards to that. So after you do that, if you wanted to, which I can show you real quick, you got to make the descending ones as well, like what your resistances have been in regards to the current setting of the stock. So this is a big one that people kind of struggle with, in my opinion. Like, what classifies a breakout? Are we still in the downtrend? Is it a rising wedge, ascending triangle? Like, there's so many different opinions out there, and that's why I love TA in regards to that, because it allows people to basically express themselves and their viewpoints based on what they've learned. But I'll kind of get into here more of a macro kind of wedge that we were in, a couple of them, and different lines we're going to use to the upside. So this one's probably a good one. And this pattern is where you really want to use majority body candles, not necessarily too much of the wicks, especially with how volatile it gets up here. But you can see the line kind of slicing through where it wouldn't allow it to get back above in multiple locations. And then that was a big breakout for us to get out of. So we basically came down, broke out of it, and then tested the whole entire wedge again. But there are obviously other lines you can get into, which I'll try to draw here. These are the dailies. And sometimes I just draw the wick and extend it out. And this one might have a little bit more wicks involved, but still primarily bodies. Let me see. It's probably a decent inflection point right there. Here's the one that I really like in regards to wedges. And one that I see as kind of showing strength that we're staying out of, which is very good to see. Yeah, just multiple touch points going down here. And if we're going off of wicks, I can kind of extend this guy up just to give us most touch points here. One sec. Oops. Again, just cuts through most places. And it can be different on this side, especially with the body, like on a squeeze like this. Like, once we're back above 52, which I'll get into in another video, it's really hard to argue what resistance is up here. You can see some bodies and find some more horizontals, but I don't want to make this video too long. But this is kind of the pattern I like to go off of, is you do find a bit of a point, like an axis almost, that you can go off of. within the shooting star to the downside, just because that can give you good trajectory, respected resistance along that way, and different key areas to look for. So I think another one could argue is right here. Does that catch bodies? Pretty close. Okay. It's not gonna let me set that there. So those are different kind of lines you can look at, and I don't want to spend a ton of time on this, even though it's already 3/4 of the video. But you'll kind of see when you get into these how much of a factor they can play out. So where you can see support lines that they rode, resistances that they met, wedges that they tried to break. So I don't have a huge wedge on this one per se, but you can see what's respected and what's not. So then when you throw over your, in my case this is the velocity indicator, you can kind of really start gauging runs and what to be looking for. So in regards to this week, this is just the 1 hour, but if you go to the 4 hour, 180 day, again, these were all just drawn in this video. So I like to show people what I look for when I'm doing that, and we'll get into just more events this week with OPEX coming up, along with equity leap expiration, meaning FTD expiration on 6/17. It's also quad witching day, so it's going to bring a lot of explosive kind of volume into the market next week. OPEX is going to bring in volume this week naturally, and then you got the Russell 1000 book rebalance at the end of this month. So anyone that's doubting or kind of thinking that this play is going to get extended beyond our means, I think you need to really revisit some facts and understand what's true here and what's not. I know they're trying to perceive a lot, but there's a lot to be said within different parts of the derivatives, the chain, and even just inversing, like with Wyckoff and a lot of different TA lining up. It's just like we need a follow through and a confirmation. So I told you what they would do last week. This is the 4 hour, along with the ESD bands and the 50 EMA. I really expected this continuation. We were honestly right on track for the major continuation into that 1640 mark, which is up in these ranges. And then we're going to break this uptrend, which again, I did that off the yearly or the daily, to where you couldn't even see these little micro ones, but they all go up and tap it every time. But I told you they were going to try and slip the ESD underneath the 50 EMA. We slipped under it here, came back above, got a nice pop, slipped back under, and we really need to see this kind of harmonic volume this week, because they got it up and kind of waved it back down. But the MACD, I believe, is still green on the weekly. I may have to double check on that. But they just barely slipped us under. I'm not concerned because of the macro trends that we're following on. We have this major macro trend on this line rising up through here. You can even argue that you could pull it under a little bit. And then you got your macro historical trend way down here. So there's a lot of support in this region, to where this is kind of the macro wedge in my recent videos. Like this is it right there. We're still up, out, and on top of it, with a rising support underneath. So it's kind of creating this L shape here, to where it gives me basically confidence that like this bounce here on the 4 hour was extremely good for us. They just sucked out all the volume that was there, along with the gamma, and kind of resetting some of those figures. So this week I'm looking for more of that harmonic buying. Expecting a lot of volume to start stepping, and we'll kind of bounce between these trading regions that I mentioned. But I really think starting Tuesday is where we see not only the market correcting, but also AMC trading up above $13, $13.50 mark. That 1290 to 1320 is still important. So once we get through this chop on Monday morning, we should have a really strong week. Like I expect us to kind of break back into this top trading range, get above this yellow one, and then get between the yellow and the green dotted. Those are the kind of historical uptrends that we've had. And then once we break this, we got this other macro trend up here off of that shooting star kind of projection that I gave you guys, that we could find some resistance at. I know we have historically. on that run to 34. So I really don't think you should be losing faith. I think if anything, there's enough catalyst to propel this quickly, and people need to understand that. So as we get into it here, like I said, we got OPEX week, equity leap expiration on Friday, AMC shareholder meeting on Thursday, and along with Evergrande, executive order, FOMC, PI. Like, there's so many meetings and catalysts for this week that it's going to be extremely volatile. I think it's going to propel the markets up, pump some liquidity back in. They'll blame it on OPEC, saying it's natural, and we'll be here to catch another run and test at this macro trend. And then once we're kind of over this 1640 mark, that's when I'll start making more of my macro projections on what's behind it and what to expect resistance-wise. I just really want to get out of this chop and show you guys more perspective as to why I believe we are where we are. So appreciate you joining. I'll be in Rico's Discord in the morning, and they're basically daily with the guys, showing them what I look at as well. Do plenty of other positions outside of the memes, so give it a like, subscribe, and I'll leave his link in the bio. Let's have a good week.